Okay, it's March 28th, 2014, and this is the ES chart. And I wanted to illustrate why you want to use order flow as a way to exit your trades by showing you an example of what not to do, which is what I did on this day. So kind of interesting. So let me just talk a little bit about the setup here. I'll just pause this real quick. But you can see that we made a new high in the ES. I've got my trend lines drawn. And we kind of have this one leg that goes down to here. You know, I know we've got kind of 1, 2, second entry, third entry, you know, kind of these pokes above, which is a good sign of two-sided trading actually. But we have one leg here, came up, and then we have another leg here. So I'm looking at this as kind of a second entry long, deep second entry long. First time that the trend line was broken right up here. So it did make me a little bit leery that this was being broken here, and we had a test of this range right through here. So as I'm looking at the price action here, you're going to see I see a lot of firming up that's going to happen here in the book. If you just kind of take a look at what's happening here on the bid side, you'll see see a lot of firming up, 700, 800 contracts. I'm trying to get in right here because I see this. I'd seen that this popped up 613. 575 is just kind of pushing through this area. Unfortunately, I got in pretty quickly. I'm just going to pause right here. So you can see second entry long triggered. I saw the firming that took place and was happy with it. And I also saw the active bulls that were over here. So in fact, what I want to do is I'm going to go back just so we can kind of get a picture of this again because it went so fast. So here we are. You can see that 613 had just printed right here. We'll go back even further here. All right, so 241, 575 printed. We have 241. Now we have a bunch, 334 printing right here, 400, 500, 600. Boom. It prints, and then we get immediate strength here in the book as well. It kind of supports that move. You can see lots of people hitting in. You see some big orders hitting. And so that's where I'm trying to get in here. And it filled me really quickly without me even kind of noticing that it ticked back. But I must have had one tick back, and it filled me. So then what I did is you can kind of see what happens here is I put this order in here 2 ticks above just randomly. I was a little bit nervous about the setup. I was nervous about the two-sided trading. I thought, well, let me just take 2 ticks and let me see if it comes back down and retest that area again. And in reality, what I should have been doing is looking at the price action or the order flow. If you look at the order flow, I've got 594 here in the book. It's being supported by 884. You can see there's lots of support here in the book. And the bulls had hit in at 891 contracts. The bears are pulling orders. So then I come up, I'm taking out. And still I have book support though, if you notice. And I still have active bulls that are pushing into here. Boom. Another tick. And another tick. And now what we're going to see right up here is we're going to see an iceberg that happens. You can see right up here the bears are absorbing all of this buying right here. So 856 contracts, they absorbed all that. That is a good time to exit your trade. So if I had waited for that signal at 56.50, I think that would have been a couple extra ticks in my pocket just by waiting just a few more minutes, watching the book and watching the order flow rather than getting out at kind of a random spot. So really good example of how you can use order flow not just to time your entries and all that other stuff, but also to time your exits as well, especially when you're scalping. Obviously, when you're swing trading, you're looking for other key points to exit, but when you're scalping, it's a good way to observe order flow. It's a good thing to observe order flow so that you can time your entries a little bit better.